Welcome to Netaji Subhash Open University. We are discussing on several topics on the goods and services tax. And today in this session, we will be discussing on one of the most important areas called as input tax credit and all the procedural aspect relating to the availment of input tax credit. Friends, let's first understand what is input tax credit is all about, and then we'll go ahead further to identify the need, requirement and the practices that we should follow for the input tax credit. Input tax credit precisely says that whenever I am purchasing or procuring or availing any of the goods or services from any of the supplier, then whatever the supplier has levied tax, that becomes my input tax credit, and that input tax credit definitely I am going to set off against my output tax liability. For example, I am manufacturing of say pen, and my price of the pen is say 100 rupees. On that, if the tax rate, assume it is 18%, so my output tax liability becomes 18 rupees and the sale price shall become 118. What the law says, to minimize the multiplicity or cascading effect of taxation, the raw materials, all the raw materials, I purchase plastics, I purchased the ink, I purchased tubes, I purchased the nib, I purchased some silver cover, whatsoever I have purchased from different vendor, or even the technology that I have taken, the service of the technology, technical know-how that I have taken from some other person, the beautiful quality writing technology, for which I paid certain amount of professional fees, all the payment on my input goods and services, right, on which those vendors, that means who supplied the goods and services to me, they have a backward integration, they paid GST. The total amount of that GST per pen, equivalently per pen, comes to say around 8 rupees. Now, whenever I am selling my finished goods, I am supplying my finished goods, my tax liability becomes 1818. The law says, this law says your output tax liability is 18, input tax already available with you is 8, so you need to pay only the differential amount, that is 18 minus 8 equals to 10 rupees. This credit mechanism ultimately reduces the tax amount in the hand of the ultimate customer, because ultimate customer then need to pay only a very minimum amount of taxes. This is the fundamental conception of ITC called as input tax credit. And now comes to the provisions of GST. Section 16 of the GST law fundamentally prescribes that to avail this benefit, because you are reducing your tax liabilities, correct, 18 rupees liability now becomes only 10 or even much lower than that. So you need to be a registered person, means you should have a GST registration to avail this benefit or avail this credit. And the law says every registered person shall subject to such condition and restriction. Maybe there are conditions, like what are the conditions? I'll speak about the conditions, but the fundamental condition, like whatsoever I have purchased, I should have a documentation. I should have a piece of paper called as invoice giving all the details into it, sale price, tax amount, the purchase, everything. So, and the restriction means I cannot multiple time take a credit or avail a credit on a same input. I can't do that. So conditions and restrictions government may impose from time to time for restricting misuse of the credit, right? The person can avail this input tax credit and entitled to get the input tax, right, to be set off against the tax on the supply on the output, which is definitely used or intend to be used for furtherance of the business. And this amount of the credit, right, this amount of the credit which you have availed in your inputs is available in a ledger is called as the electronic credit ledger. My friends, let me clarify the word electronic credit ledger. You understand the word credit ledger. Credit ledger means you purchased goods with payment of taxes. The tax, definitely you are going to get a claim the benefit out of it. That means it becomes your credit. You are eligible for that credit. The GST enter law is on a digital platform, right? So whatsoever your vendors has levied taxes, that is always already available in your that GSTR 2A in the return chapter, in the return filing chapter. We have discussed about that things, that it's a GSTR 2A, and this amount of credit already flown into a basket called as electronic credit ledger. It is the amount is already available. What only you need to do, you at the month end you finalize what is your tax liabilities, and then finding out how much is your credit already available in that basket. Take the credit, net it off, balance portion becomes your liability, pay the amount through the cash ledger, and then knock off the liabilities. That's the basic conception of the input tax credit. What specifically says about the law? The law says no registered person shall be eligible to a credit for any input tax credit on the goods and services purchased by him unless he is in a position of a valid or proper tax invoice or a debit note issued by the supplier under the provisions of this act. That means you purchase certain goods or certain raw materials, so you should have a proper invoice, and the proper invoice means mentioning all the details, your GSTN number, that person's GSTN number, the value of the goods, the volume of the goods, the SSC code or the HSN code, what is the category of the goods, then what is the gross value, what is the tax value, whether it is IG, whether it is CGST, whether it is SGST, and what is the serial number of the invoice, right? Properly all these documentations should be available for availing of the credit. He has received the goods or services or both. So in other words, if you have got only an invoice, there may always be a doubt that it is a fake invoice. It is not an invoice through which you have procured the material. You just make out certain invoices incorrectly with an objective to reduce your tax liability. That is not eligible, that is not allowable. So to get this input tax credit benefit, which is definitely is one of the biggest benefit for GST, you need fundamentally to check that you have got number one, a registration, GST registration under the GST law. Number two, you have actually procured the goods. Number three, you have the invoices with you. Number four, the goods and services is actually available with you. You have availed it, then only you are going to get this benefit. Few issues always also important in this aspect. You purchase the goods, and then after purchasing you also avail the credit. The law says that if you have not paid to the vendor within 180 days from the date of receipt of the material, the credit that you have already availed, you will be ineligible or disallowed to get that benefit. So what the law says, let's understand the section 16 once again. It says what the recipient, the person who receives the goods, fail to pay to the supplier of goods or services or both, right? within a period of 180 days from the date of the issue of invoice, the date when he have issued the invoice, the vendor he issued the invoice, I got the goods, I took the credit, I reduced my tax liability, but for 180 days I have not paid the money to the person concerned, the supplier concerned. Am I eligible to get the credit? Law says no, you are not eligible to get the credit. You need to reverse it. You need to reverse the credit that you have already availed shall be ineligible, and then you need to immediately reverse that one and say that it is incorrectly availed. That becomes a tax liability for you. Absolutely, that becomes a tax liability for you. The input tax credit may also undergo a change, value change. It's like I purchase 100 number of a particular goods on which input tax credit already there in the invoices. I avail the input tax credit and the goods started using in my manufacturing or processing industry. In between, after 2 months, I found out, or my engineers found out, that few items are defective. And for this few item defective, they say, sir, this is not compatible with my production, so please return it back. I send back the goods because it is rejected. And to the extent it is rejected, I claim that I should get a credit, means in a credit memo. That means I paid you for 100 number, 5 number are defective. For this 5 number, you refund back the money. So the money which is returned back by way of a credit note, definitely he has charged on that 100 number of items. I have also availed that 100 number of items. If out of that 100, 5 is returned back, this process is called as issuance of credit note. So the input tax credit on that 5 also needs to be reversed. Otherwise, what will happen? It will be like excess availment of the credit. So whensoever the issue that comes out, that there is a rejection of goods, a return of goods, or something damage or destruction had taken place, and there is a credit note for the main goods, the input tax credit need also to be adjusted according to that, and that ultimately calculates the net input tax credit availability. My friend, we need to finalize this input tax credit at every month end, because GST is a seamless credit mechanism, and the total amount of credit that is available in my electronic credit ledger need necessarily to be checked out one by one with all the invoices that are available physically, because that will be called for at the time of assessment or appeal or other adjudication processes. And then at the month end, definitely this amount to be reduced from my gross tax liability to determine my net tax liability. And that's come the beauty of this subject called as input tax credit. The government also announced that when the erstwhile law ultimately converged into GST, what is erstwhile law? I was covered under central excise law. There was a CENVAT credit. I was under VAT law. So for my goods are concerned, that calls as a VAT credit. When all these things merge into GST, so the credit of VAT law, credit, unavailed credit of CENVAT law, this all came into the GST, and government also, the GST law also permitted that yes, this carry forward of the credit should also be eligible to be taken in the GST era, and people who has got a continuation of the business can carry forward their ongoing unadjusted GST, VAT and service tax, and central excise, all the credit to the GST era. That concept is called as transitional credit mechanism. Transitional credit mechanism, in short called as TRAN, T-R-A-N, and the form which was filled upon by the registered person is called as TRAN 1 form, submitted to the government, and with the details that how much credit is to be carried forward to GST, how much closing stock was there with GST paid, excise and VAT paid on that closing stock, how much GST I will carry forward to the GST regime. So from the government side, from the lawmaker side, it's a wonderful mechanism to ensure that a seamless credit is ultimately maintained in the entire system, in the entire ecosystem, and everybody gets the benefit till the goods reaches the end customer, and end customers definitely is not burdened with multiplicity of taxes. This subject called as input tax credit. Thank you, my friends, for this particular session.